Thanks for clicking. The Canadian Real Estate Association, the CREA, just released its report on Canada's real estate market for the month of August, showing continual drops in sales and prices. The report comes amid growing angst that interest rates are going to be rising for the foreseeable future, with Canada's big banks admitting that interest rates are probably going to rise over 4% sometime soon. Given that Canada's real estate market continues to struggle amid rising interest rates, worries are continuing to grow over the real estate market. CREA addressed the rising interest rates as well as the stress test in its report, making its own predictions for the future of Canada's interest rate policy and making its own suggestions for mortgage qualification standards.
This should be good.
So what I want to do today is go over the report looking at Canada's real estate data for the month of August, take a look at CREA's predictions for Canada's interest rate policy and what they think should be done about mortgage qualification standards, and then discuss what to look for next. How high the Bank of Canada goes on interest rates will be largely dictated by the pace of our inflation rate, which is set to be released next week. We'll obviously have updates out on that rate on this channel. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into this data. On to the data. The benchmark price of a home in Canada, that is, the price of a home which represents the most popular set of features, was down in August to $777,000, down from July's $789,000. So a $12,000 decrease in the price of a home representing the most popular set of features. Not a huge decrease in 1 month, but a decrease nonetheless. Unlike the benchmark, the average price of a home in Canada actually went up in August to $637,000, up from July's $629,000. However, the increase in the average price of a home in Canada is a little skewed, as CREA even admits, as it's heavily based on the real estate markets in Toronto and Vancouver. If we remove those markets from the calculation, we get an average price of $524,673, down from July's $525,971. So if we remove Toronto and Vancouver from the average price of a home in Canada in both July and August, we get a $1,000 drop in the average price. Again, a very modest drop, but a drop nonetheless. And not only were prices down, but transactions were down too. Almost 25% since this point in time last year, a 24.7% drop in the number of transactions. This was the 6th consecutive month of price declines in Canada's real estate market, though it was the smallest decline as of yet, leading CREA Chair Jill Udo to note that the sharp adjustment we've seen in Canada's housing market might be coming to an end. Indeed, if the predictions from CREA come true, we very well might be at the end of the real estate correction. Sean Cathcart, a chief economist at the CREA, noted that Bank of Canada's policy rate is officially above neutral, meaning the policy rate is restrictive. It is restricting economic growth. It's hurting, and therefore is not expected to go much higher. As such, according to Cathcart, the Office of the Superintendent for Financial Institutions, OSFI, should reconsider the stress test, should reconsider mortgage qualification standards. Cathcart noted OSFI is likely thinking hard about what makes sense given the new realities and how to balance the community of interest they are tasked with securing.
Seems like you haven't learned anything. Anything.
I'm not sure if Cathcart wrote this portion of the report prior to Tuesday, when the whole world seemed to switch to the understanding that interest rates are going over 4%, maybe well over 4%, but the report certainly has not aged well. And the sentiment that OSFI should consider amending the stress test, maybe even removing the stress test, echoes that of the Toronto Regional Real Estate Board that we talked about a few videos ago, which also said that OSFI should be considering removing the stress test. And as we discussed in that video, OSFI has thus far resisted those calls to remove the stress test, to reconsider mortgage qualification standards.
I don't think about you at all.
And it's not clear that OSFI is going to be bowing to that pressure either. Canada's average real estate price was $504,000 in January of 2020, right before the beginning of the pandemic and ultra-low interest rates. It then rose by over $300,000 in a matter of 2 years, reaching its peak of $816,000 in February of 2022. It has since retreated, going down as of this month to $637,000, but is still up over $130,000 from a period of 2.5 years ago. That's almost a 10% increase year over year in Canada's real estate prices, which is unheard of. That's not normal. That wasn't the normal operation of the market, to see those types of price swings in just a period of 2 years. And given that OSFI's mission is to maintain consumer confidence in the financial markets, it's unlikely that they're going to want to return Canada's housing market, Canada's real estate prices, to the days of what many consider to be a major bubble. In summary, Canada's real estate prices continue to fall. The benchmark price is down. If we take out Vancouver and Toronto, the average price is down. Sales are down by almost 25% from this point in time last year. And News at 11, a real estate board, wants buyers to have more buying power. Whether or not OSFI will eventually back down on that stress test, or if these interest rates are going to go up even further, remains to be seen. But we will obviously have updates out on any changes to the mortgage qualification standards or to our interest rates on this channel. Click like and subscribe if you want to get those updates. But for now, thanks so much for watching.